Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 10th of June. All right, now before we kick things off, just to get things squared away from Friday, we've got the US non-farm payrolls coming in at plus 75 versus the 185 that was forecast. So that's a much weaker result. But don't forget, the unemployment rate is what the Fed is looking at, and that came in as expected, pretty much on her 15-year lows, I think it is. But the other concerning thing and the negative for the US dollar was the average earnings number. Now, that was slightly weaker than expected. So you put these two puppies together and you get that negative result, which is saw the US dollar sort of dip to the downside. But just coming into trading, first thing today, be aware of the geopolitical events that are going on. So the main part obviously being the US and Mexico have come up with an agreement here on the tariff. So with that, that's given the US equity futures a boost already. I think they're up about 0.7%. So that's going to be a bit of a correction there for the dollar. The dollar index, if I just bring you back to the main charts there, if I just blow up the dollar index, I mean, it is opening, but it is opening up higher than where it was. So this is a Mexican issue is a positive for the US dollar, all right? So mixed conditions to start the trading week, which is not unusual. We've had sort of weird things happening on the weekends, obviously with Trump coming out with all sorts of plans against Mexico, China, Japan, whoever he's got his eyeballs on. So when we are looking at the trading just at the moment, so you've got to factor in Friday's fundamental releases. We do have thin liquidity. It's a European holiday across Europe, France, Germany, I think in most of Europe. The UK is open, but what we are seeing at the moment is a bit of dollar weakness. Now, that was stemming from the fundamental release, the US data. Now, as I said, that US-Mexican agreement on the tariffs may cloud that judgment somewhat. So just be aware that we're going to wait for Monday to factor some of these issues in. But the core market drivers, this is where we're starting to get back into normal markets. If we could just get rid of these geopolitical events, that's when we focus on the economics, and that's when trading becomes easy. So still those geopolitical events hanging around, making it a little bit trickier than it needs to be. Now, also, just on, just coming back to the Friday's numbers, one number that gets lost in the US non-farm payrolls is the Canadian employment numbers. Big improvement in the unemployment rate, and sort of a good correction or positive move on the employment change. So funnily enough, out of all the trading opportunities from Friday, dollar CAD, it was a pretty tough trade with those two big releases coming out at once. This is the currency pair for me, just at the moment, on the fundamentals, is the trade to be on. Now, obviously getting short back towards 133, sort of 30 would be ideal, or back towards 20. At this stage, you can see there's a bit of a gap here on the open. We have to sort of wait and see how this plays out. Oil still back at $54, but that was the trade that had both components of those fundamentals from Friday, the US and Canadian employment numbers all working together. It may look like it's an easy trade. I can tell you the liquidity situation around that event is not advantageous for trading. Now, so what do we got? So Aussie, which was trading lower, has just little popped higher on the US non-farm payrolls. But you know what? The overall trend is down in this thing. So to me, this is it's not really a false break, but it's going to push the Aussie into a sideways moving sort of situation. Same with the Kiwi. They're pretty much trading identical. You've got dollar yen, which is the safe haven trade. You'd expect this to gap a little bit higher on those US-Mexican agreement. Okay. It gapped about 30 points because, that's another situation where the pressure's off, the uncertainty. Obviously, we still have China still banging away. And, even last week we had the ECB pretty much rolling back any sort of measures, any QE measures. So that's like bearish, but Euro's above 113. Now, this is a bit of a culmination of what the market factored in as far as the ECB being dovish, and then you throw on some weak US numbers, and this thing's a little bit confusing. To me, I can't really see it going too much higher, but it's in the middle of nowhere at the moment, so it's too hard to call. And sterling, just rocking and rolling with Brexit and a little bit of UK data. it's still, until that Brexit gets sorted out, really, really hard. But dollar CAD, as I said, pretty clear direction on dollar CAD for the time being. All right, now just to bring you back, just to give you a quick run through of what's coming up. So there's not a hell of a lot out today. So I know there's UK GDP numbers I think are out, but the key thing for me is I want to see how these currencies line up once the markets are fully engaged, and that's probably going to need the US or North American session to start, and then we'll start to see where these currencies are banging away. Now, don't forget, Monday, UK time, 6:30 p.m., or 6:30 GMT, I should say. We've got the review and weekly trade setups. But just look through the main data, the data that you have to be flat for this week. We've got some big numbers. The UK employment numbers, these, like all the employment numbers everywhere, these are big rock and roll numbers and can get sterling moving. Of course, you want to be just aware about Brexit. If there's any updates, this will get sort of once again pushed to the side. But then coming down through into Wednesday's trading opportunity, we've got US and Chinese CPI data. This is going to be a really good sort of 24 hours, especially for the Aussie Kiwi and obviously the Yuan. And then you get all the rest of the majors chiming in with the US CPI numbers. Now, this release is really important following the US non-farm payrolls. If the inflation numbers are weaker on the back of weak employment numbers, you're definitely going to get some comments out of the Fed. So this is really game time. The US CPI numbers, it's going to be exciting to know what happens. If it comes out stronger, slightly stronger, well, it's going to correct that US non-farm payrolls, and we're back into that sort of sideways, neutral mixed US numbers. So for me, I'd like to see it weaker just because it makes an easier trading situation. And then that rolls into the aggressive Aussie employment numbers. The RBA has already mentioned in the last two statements, all they are focusing on is the labour market, right? So this is extremely important. The last month's employment numbers were weaker. If these are weaker again, they're going to start factoring in more rate cuts out of the RBA, and the Aussie will come under pressure. Once again, if they're strong, it takes the pressure off the RBA. The Aussie's already starting to break a little bit higher. We could start to see that gain some wings if those employment numbers are stronger. But all in all, these are really good. These are good numbers, okay? They're good, tangible numbers to work with. The employment numbers out of the releases coming up, they're the trickier ones because you've got 2 or 3 different variables coming out at the same time. But the CPI numbers, this is our gravy, right? You've got to get ready for this. These are the numbers that you really want to be focusing on and hit the markets if there is significant variance. All right, guys, that's pretty much a bit of a wrap for me on what's happening today and across the board. Jump in, tune up your charts, and get ready to trade. All right, guys, have a good one. We'll catch you later on. Cheerio.